The past few weeks has been pretty crazy. We've seen bank failures, we've seen mega cap tech rally, we've seen plenty of random things. And for those of us based in reality like we are here on this channel, it's been a rough couple of weeks, but we're starting to see things start to reverse. But first, let's talk about some of the dislocations that occurred in the market. If you've been reading Twitter or listening to a lot of market commentary, you've been hearing people not fully understanding the bank situation talk about how the Fed is going to crash the economy, that they're going to destroy the world, end of day doomsday. And I get it. I've been one of those people before myself. However, COVID did happen if you really go way back into the history of this channel, back to January 2020. Anyways, that caused bond yields to fall quite a bit, quite dramatically, to recession is happening territory. I mean, these are like record drops in bond yields that occurred. And mega cap tech rallied. Today, we saw mega cap tech give a lot of those gains back. And we have to take a step back and look at the bank thing again, because that was really driving a lot of the market tension the past few weeks. And the Fed is fully knowledgeable about this. If you've been listening to the Fed, and we try to listen to every single word that comes out of the Fed's mouth, sometimes that's not the case. It's hard to find a video, or, the headlines are good enough. But we really do try to dig into that and watch every video. And that sometimes gives us an advantage. So 3 months ago, maybe even 4 months ago at this point, Vice Chair Barr, who's speaking tomorrow, testifying on Capitol Hill, just like Powell did the day before Silicon Valley Bank, whose CEO happened to be on the board, or some, not on the board, but working with actively at all times, essentially, the San Francisco Federal Reserve. Barr said they were investigating capital requirements for the non-large banks and non-banking private sector. These are credit unions, private equity companies, things like this. Additionally, Kashkari yesterday said, before they even started hiking rates, they were communicating with banks on their exposure to higher interest rates. So while many people are saying rates need to go lower, the Fed needs to cut, and stocks need to rally, the Federal Reserve is 10 steps ahead of them. They've been very well aware of what rates we're going to do. They've been very well aware of who's going to affect. They were raising red flags around Silicon Valley Bank months ago. I think even last year. That's before Barr even spoke. So, none of this is a surprise to the Fed. They're very much prepared for it. And you should just believe their forecast, because they are the Federal Reserve, and the phrase of market wisdom that has been handed down to us by market elders, some of which who have already done an entire life in this industry, versus us that haven't done an entire life in this industry, say, don't fight the Fed. So I'm going to take that piece of advice, that number one blanket piece of advice, and I'm going to give it some merit here. So I'm not going to fight the Fed. Obviously, haven't fought the Fed, haven't encouraged any of you guys to fight the Fed in any of these videos as of late. Maybe I did way back, I don't know. But as of late, I'm sticking with the Fed's projection, and the market still is not. It's starting to correct. That's why you're seeing the mega caps down. I mean, these are like 1% moves in Apple and Google and Microsoft. These are companies where insiders are selling stock, earnings are flat or declining, valuations are near-ish all-time highs. It's just not the makeup of a buy. It's not the makeup of a bargain. It's not something you buy and expect to, to do well in. You're overpaying. You're getting ripped off. In my opinion, that's just my opinion. We're obviously going to see what happens, but that's just my opinion. I'm sharing it with you. I might be right or wrong, but that's my opinion. And that takes us to energy. Very volatile space. Always has been. Always probably will be. I heard some electricity trader at one point say energy was the most volatile and the most predictable market. I would love to know his, he was like a physics guy, his way of predicting the actual flows and consumption with high levels of precision. But he was on a private jet. I'm not on a private jet. So there you go. There you go. Anyways, I hope to be on a private jet one day. That should come to fruition. We'll see. Maybe, maybe not. I don't know. Who knows what they're going to do with taxes? Maybe I have to go to Dubai or something. I don't know. The future's uncertain. That's underlying all of this. But one thing I am pretty confident in is nobody wants to invest in oil production, really. I mean, there is some going on, but unlike previous time periods when we had an economic boom, you know, people would invest in production a lot because the economy was growing, inflation was happening. They wanted to invest in production. And then a recession would hit and that new production would come online or continue to come online as that recession hit, and that would cause a massive fall in oil prices. I don't think that's as much the case here. Oil companies got hit very hard during COVID. Low prices severely impacted their balance sheets. That was one incentive not to invest in new production and new capital expenditure. And then we obviously had the change in administration. So you had tremendous uncertainty, balance sheet stress, a lot of fear in the industry. And then you get somebody who's overtly negative towards the industry. And then you have rapidly expanding emerging markets, you know, Africa, India, and China, that are going to make up a lot of the future oil consumption. You have an industry that has secular tailwinds, in my opinion. So, you know, when you get these crazy pullbacks on banking stress, which we have said is really not that big of an issue. I mean, Silicon Valley Bank, it's in the name. You know it's been going down. Silicon Valley Bank. And Signature Bank, apparently they had crypto exposure. I think that's all you need to know. And then, you know, right before that, it was Silvergate and FTX. So you get the idea here. You heard what Kashkari said, or what I told you Kashkari said. There's also a video about it on my Twitter account about how they've been looking at this for a long time. If you've been watching all the videos, you know I've talked about Barr a few times, that thing 3 months ago. So in my opinion, we've got nothing to worry about. This was just a crazy thing, and the last couple of weeks have been very crazy. I mean, are people making money in this market? I would love to know. I'm sure they're out there, obviously, because mega cap tech was up a lot. A lot of people probably made money in the past couple of weeks, you know, just sitting idle. But this was one of the times where we really did not have our best stretch. We're not blown out of the water or anything by any means, but it was not fun. It was not fun because, you know, I viewed having puts and energies being a good mix, and we just got the one outcome, the black swan, that made it so it wasn't the case. But I think it's a passing black swan, this banking crisis. Not saying there won't be more. There probably will be more. There's, you know, but I don't think it's a big deal. Deposits are safe. So it's kind of like just if I went out of business. Like if I went out of business, sure, my clients would probably lose some money, but that would be someone else's gain, first of all. And second of all, that's not going to affect the broader economy. It's just not. My well-being does not affect the broader economy. My business's well-being. Left skewed, not my other business is, but really only one besides left skewed card. If you haven't checked that out, if you need a digital business card, we got the best digital business card on the planet. Works with your Apple Wallet. If you do any business like I do here online, you can show people your full value, everything you have to offer. Think about how much value you get on these YouTube videos. If I just met you and told you, oh, I'm a financial advisor, I manage assets for clients, I can help you out, you might be like, oh, okay, sure, yeah, who is this guy? If I give you my card, boom, you got everything right there. You can do all the work yourself and make your own decision. So it's a good product, and I'm happy to provide it. So that's today's video. And if you have any questions about it, comments or DMs or my number's on my card. You can text me. That's today's video. And until next time, peace out.